My guest today is from Larsen and Toubro, Mr. Shankar Raman, who is the President, Whole-Time Director and CFO of the company. Mr. Raman, thank you very much for joining us on NDTV Profit. We've seen your numbers. We just wanted to assess how the economic climate is with respect to infra projects, because we've seen some kind of slowdown happening in Q4, and that you predicted as well, because going into an election there may be some slowdown. But how do you see FY24, and when do you see this see the pickup in orders coming in?
Good morning, Sajid. Good morning to all the viewers. I think we are extremely positive about the months that are lying ahead in the rest of the financial year. It is to be expected that when we have a major national event like an election, that there is going to be some amount of interruption to the normal flow of transactions, particularly when it involves capital outlay and investment programs. But the good news is much of the programs that were launched over the last 3.5 years are well into their execution phase, and many of them are also nearing completion. So what we expect to happen, let's say post July, August, when the new government settles down, the bureaucracy assumes charge, etc., is a completion of a lot of these which are pending completion, which will feature the initial period. But we expect the government to sustain their investment-led growth program. If you really look back, this model has played very well out for the government, both from an economic point of view and also from a political point of view. I think we've been able to address a lot of social issues in the process of creating and strengthening the infrastructure of the country. Obviously, trade and commerce have benefited, and those are borne out by numbers. I think India stands out as such a shining alternate to the gloom and doom that we see in the economies elsewhere. Either they are caught up in military strife and geopolitical tensions, or they're really caught up in the inflationary spiral, and many of them are going through stagflation as well. So India is a very refreshing change, and I think we are quite fortunate that we are in our business staying very relevant to the growth model that India is pursuing. So we are optimistic. I think from July, August, we expect things to get back to normal.
Give us a sense of the kind of prospective pipeline that we see in FY25, and do you see order inflows or the tender openings happening only post July, August, and so the second half would be much more concentrated with respect to the kind of order flow that will come in?
Sajid, it will happen in two parts. One is all the bids that have been responded to the request for proposals will get processed and get opened. So that will be the first one. Assuming there is continuity of the economic policy, I think we should expect those awards to come in and then the programs to get kick-started. The second part of this is new programs. Now, there are several programs which are actually initial packages of a large nationwide connectivity. Now, be it the rail corridor, be it the interland connection, be it the trade corridors, the logistics distribution systems. There are several things which are in their initial phases. The country over the last 3-4 years have invested in some segments of those, and those would require completion, because the economic benefit of those programs will really flow through only if they are completed end to end. And we do think the country will get connected increasingly over the next 10 years. The country will get connected fairly deeply by multi-mode. And that could ensure that a company like us, who straddle various segments of infrastructure, remain very busy and relevant.
Sir, if I look at your guidance, you've given a 10% growth guidance for the order inflow. If we translate that into what it's going to come through in domestic order inflow, you is looking at the domestic order book or order inflows going up by nearly 30% in FY25. Do you see the way the orders will flow out, you'll be able to do that? And also give me an assessment of how order flows are coming from the Middle East, because there is one thought that the there has been peaking of orders coming from Middle East, and so there will be some slowdown that's coming from there.
It has to be looked in the context of FY25 being really a 7, 8, 9 month period. So when we talk about a 10% growth for FY25, it virtually on an annualized basis could mean upwards of 15%. So on the back of a 30% growth in FY24, a 15% growth is a fairly robust estimation of the opportunity. When we look at the opportunity pipeline on a trailing 12, on a forward 12-month basis, we almost are arriving at somewhere between 12 and 13 lakh crore of prospects. Roughly about 7 lakh crore is Indian opportunity and 5.5 lakh crore is international opportunity. The Indian opportunities are spread across the various sub-elements of infrastructure and energy. I think the energy transition is a major catalyst for some of the investments that would happen in the energy area. Then we look at international. I think Middle East has been a large contributory. And the changing dynamics in Middle East is very noteworthy. Earlier, Middle East used to be largely projects in the area of oil and gas. But over the last 5 years or so, Middle East has started broad-basing its infrastructure development program. It has started building cities. Middle East is always known for road connectivity. It started developing rail connectivity and also urban transportation. Fact that Middle East is getting positioned as a destination for tourists. Dubai was always that, but beyond Dubai, Middle East was not really known for a destination for tourists, and that is changing. The socio-economic order also in some of the conservative countries there are changing. Given all that and the need for that local population to be gainfully employed, the investment programs funded largely by the steady oil price at about $80 or thereabout per barrel is giving confidence to the government that they should embark on building cities, building roadways. And when you talk about building cities, you talk about rail network, water network, sewage treatment, and theme parks, and what have you. So all of this together makes Middle East almost mirroring India in terms of potential for the breadth of infrastructure investment. And L&T feels quite privileged that its capability has got demonstrated in that market over 20 years. I think wisdom of our earlier generation of leaders positioned L&T as a very credible player in the markets. And year on year, we've been delivering projects to the Middle Eastern customers. So between India and Middle East, I think we are bang in the middle of extremely positive 10, 15-year period.
My last question to you is on your strategic vision, because you mentioned that 14% CAGR growth for order inflow and 15% for sales is the target by 2026. And so far, actually, you have been ahead of the target. If I look from FY21 to 24, it's around 20% in order inflow and 18% in sales. Do you expect to continue with this kind of growth rate? Because this year may be a blip, but it may, next year or the year after. Do you see the FI CAGR to be in the same range by FY26?
I think we are at the moment, as you rightly said, running ahead of the plan. We hope to hang on to that lead and enter the last year of the plan with sufficient cushion in the bag. In all probability, both in terms of order inflow and in revenue, we will outperform the plan as we see it today. Of course, this has to be assessed because another 2 years have to go past. And in the third parameter, which is profitability measured by ROE, we had guided the market that our aspiration is to reach 18%. As we speak now, we are at 15%. We started the journey at 9%. So we've come a long way from 9% to 15% through capital efficiency, productivity improvement, profitability improvement, etc. We expect to continue on that path and hopefully meet that target as well. So we are expecting successful completion of the 5-year plan as we see things today.
Mr. Shankar Raman, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.